Ever wondered which stocks are on the brink if making it big? Today, I'm unveiling those potential game changers that might just become the next trillion-dollar giants. Imagine being ahead of the curve, positioned right where opportunity meets foresight. These are the under-the-radar giants poised to redefine the financial landscape. Don't miss out on witnessing their meteoric rise. Keep watching. In the ever-evolving world of finance, certain companies set the benchmark, constantly pushing the boundaries of success. Here is a list of companies that are on the cusp of joining an elite group, the Trillion-Dollar Valuation Club. 1. Berkshire Hathaway, BRKA, BRKB. First up, Berkshire Hathaway, steered by none other than the legendary investor Warren Buffett. With an impressive market cap already at $750 billion and strategic investments like its stake in Apple, this corporation seems poised to make its mark in the trillion-dollar arena. Given that Warren Buffett is now 93, even though he's still in robust health, leadership transitions at the company are inevitable. This could lead to potential decisions such as initiating dividends, divesting assets, or other strategic moves that may unveil hidden value for shareholders in the future. 2. Visa. Moving on to our next contender, Visa. Emerging markets and the global shift from cash to cards have pushed Visa's revenue growth to impressive rates. The global financial landscape is witnessing a transformative shift as more and more people are moving away from traditional cash transactions and embracing card payments. It's quite reasonable to believe that Visa will continue its upward trajectory. Over the past 10 years, Visa's revenues have increased at a compounded annual growth rate of 11%, and its free cash flow has seen an impressive annual rise of 15% during the same timeframe. As a result, Visa, with its expansive network and robust business model, has experienced remarkable revenue growth. This surge is not just indicative of the company's strong position in the market, but also hints at the vast potential that lies ahead as these trends continue to evolve. 3. MasterCard. In the same vein, MasterCard can't be ignored. Currently, MasterCard possesses a market capitalization of around $375 billion, trailing behind Visa, which stands at a notable $490 billion, as both race towards the coveted trillion-dollar valuation milestone. When you take a moment to combine the valuations of these two financial enterprises, they're tantalizingly close to the trillion-dollar benchmark. But why is MasterCard such a promising contender? The answer is clear-cut. Their dominance in the global digital payment realm is nearly unparalleled. Given the ongoing global transition to digital transactions and the pivotal roles both Visa and MasterCard play in this arena, ensures they remain at the forefront of the electronic transaction sector. Therefore, for investors scouting for long-term growth opportunities, companies like MasterCard, with their rock-solid market foothold, invariably rise to the top of the list. 4. Taiwan Semiconductor Manufacturing Company, or TSM. Diving into tech, TSM dominates the semiconductor world, having secured over 50% of the total market share in recent times. As AI and other technologies grow, so does TSM's potential. This positions TSM as a prime contender for reaching the trillion-dollar company rank. Given the projected increase in chip sales over the next 5 to 10 years, especially with the rise of booming technologies like artificial intelligence and edge computing, the broader market is set to expand. TSM is poised to capitalize on this market growth due to its unparalleled scale and technical expertise. Are there potential obstacles to TSM's continued dominance? Geopolitical factors certainly come to mind as significant challenges. Nevertheless, TSM is strategically diversifying its manufacturing base with investments in places like Arizona, enhancing the company's resilience. 5. ExxonMobil XOM. Now an unexpected entry, ExxonMobil. Think oil's going out of style. Geopolitics and underinvestment in new oil discoveries suggest otherwise. Keep an eye on Exxon. On initial observation, one might question the rationale behind including XOM among potential trillion-dollar corporations. With the prevailing sentiment suggesting a dwindling future for oil, how can such an outlook be justified? However, global dynamics shift the narrative. Factors like the conflict in Ukraine, unrest in the Middle East, and the complex U.S.-China relationship have created unforeseen volatility. The emphasis on renewable energy and decarbonization has steered investments away from new profitable oil and gas explorations. Yet, ExxonMobil has deviated from this general trend. By consistently investing even during challenging times, the company has reaped significant rewards, discovering extensive fields in regions like Guyana. According to industry experts, the demand for oil is projected to rise until approximately 2030, after which it will stabilize. Given Exxon's sustained commitment to oil and gas, coupled with its upcoming profitable ventures, the possibility of it attaining a trillion-dollar market cap within this decade appears more plausible. especially if oil prices surge beyond $100 per barrel. 6. Walmart. Remember Walmart's heyday? They're making a comeback with a robust approach, and their stronghold in international markets like Mexico is a game changer. Walmart was once the darling of the stock market. In the late 1990s, its shares possessed valuations of over 40 times earnings, making it a favorite choice for many investors. However, the subsequent 2 decades haven't been as favorable. Walmart wrestled with the rise of e-commerce and faced reputational challenges from various controversies and negative press coverage. Many started to perceive it as a company nearing its growth saturation point. Yet in recent times, Walmart has made a notable comeback. The pandemic provided an opportunity for Walmart to surpass customer expectations, and the company's refined all-channel strategy began to shine. One of the lesser-discussed strengths of Walmart is its vast international footprint, encompassing over 24 countries. A notable mention is Walmart de Mexico, the brand's arm in Mexico and Central America. As Mexico's premier retailer, Walmart de Mexico has seen tremendous growth over the past 2 decades, mirroring the nation's economic ascent. Given that Walmart holds a 70% stake in this entity, WMT stockholders stand to benefit considerably from this growth. With these advantages in its arsenal, Walmart might well be on its way to joining the elite club of trillion-dollar enterprises. 7. Danaher DHR. Last but not least, Danaher. Starting from 10 cents each in 1983 to over $200 today, it's a growth machine. Now pivoting to healthcare, they're looking to ride the bioprocessing boom. Reaching the status of a trillion-dollar company is no small feat. Currently valued at around $160 billion, Danaher has quite a journey ahead to achieve the trillion-dollar mark. Yet it would be unwise to underestimate Danaher. The company has been a powerhouse of growth. Danaher shares were priced at about 10 cents each in 1983, adjusted for splits. Fast forward to today and they're trading at over $200 a share. How did they achieve such impressive growth? The company mastered the art of mergers and acquisitions. They buy significant portions of an industry, enhance and expand its operations, and then yield top-tier returns on those investments. In a notable shift, Danaher has recently focused all its energies on healthcare. A noteworthy mention is its significant presence in bioprocessing, a crucial step in developing new pharmaceutical drugs. Industry experts predict that bioprocessing could see an annual growth of nearly 15% over the forthcoming 5 years. Such projections hint at Danaher's poised position for sustained growth in the future. These 7 giants stand out as potential game changers in their respective sectors, each showcasing trajectories that indicate a promising future. While they've already made significant strides in the business world, it's essential to approach any investment decision with diligence. Their progress in the coming years might just reshape the investment landscape. To my viewers, please note the financial details shared are for informational purposes only. So, before making any moves, ensure you conduct comprehensive research on each, or consult with a financial advisor before making decisions. Remember, the market is as unpredictable as it is promising. Don't forget to like, share, and subscribe for more stock insights. And always remember, invest smartly. If you found value in this video, don't miss out on my comprehensive guide, How to Invest for Beginners. Dive in and elevate your investment game. Just click on the video popping up on your screen now. Stay informed and stay safe. See you next time.